IRS doesn't care how hard you worked. They're gonna take your money regardless. They don't care. 30, 40, 50%. Oops, right? You don't have a whole lot of tax strategy in your personal name. Why do you think that is? Why do you think LLCs, S Corps, C Corps, trusts, why do you think they have all of these tax codes written about them with all of these different deductions and exemptions and things that they can do? And then there's you. What can you deduct? Nothing, right? Because when you pay yourself out of your business, you don't have any ability to defer taxes, to do anything cool. It's too late. It's already in your name. You've already spent it. So anytime you want to spend money on expenses that these other entities can deduct as a legitimate deduction, you can't. So why is everybody paying themselves these large wages? One client paid himself $3 million in 1 year, W-2. You know what his tax liability was? Over $1 million. Where does that make sense? $3 million, what did he spend it on? He went and took his $2 million and went and bought a lake house and jet skis and a new truck. See, all of those expenses are legitimate expenses out of the trust. So if you drove the income into the trust, you'd have $3 million for a bigger lake house and more jet skis and a cooler truck, right? So what are we doing here? When you pay yourself personally, you lose the money and you lose the ability to have leverage. When you pay the trust or even a corporation and you spend it out of the corporation, guys, what you're doing is you're using those pre-tax funds for eligible deductions out of those entities to buy stuff that you're already going to buy. You're just doing it under a different name, which provides asset protection, but B, it allows you to have more money to do so. If you guys are paying yourself crazy, outrageous W-2s or even 1099s, stop doing it. Get on my calendar and I'll show you guys how to double your money overnight. It's pretty easy.